Friday, October 3rd, market analysis Stan Ehrlich. And a little late today, 2:10 p.m. California time. I always start out with the stock market indexes, go to futures and some stocks, and maybe some other commentaries like I continue to mention that I am expecting and still do. There's a low that usually happens in October. Could be very violent, very fast, and only last a few days, but big. I don't know. We haven't seen that before, but I've been at this for half a century, so that wouldn't surprise me. We today have a new high in the E-mini. The new high ended up closing around unchanged, a little higher, a little lower, doesn't matter, but not a lot lower. And no bearish engulfing candlestick, which, if that happens in overbought conditions, which it did in the NASDAQ, will create a red bearish engulfing ER sell signal, which is oftentimes the beginning of a break. Not just a break, but sometimes a very large, long-term break. But of course, that doesn't happen every day, meaning fairly rarely. But still, that technique pinpoints the beginning of some major moves. So let's take a look here. We got some today, in fact. Next chart is, and I'm going to skip over the 5 minute or 1 minute or the minute, whatever time frame charts, because they're not particularly important yet. So we have nothing super important for the E-mini on this particular chart, except for overbought conditions again. We are back up above the overbought conditions at the high of the day, and it turned down at that point a bit. Nothing major, but the reversals that happen in the market don't look important at first. They look like a typical, reaction one way or the other, either direction, but they get much worse. It's pinpointing the conditions on which you should be concerned that they will or could turn into a major turning point. This is one of those situations. I don't know yet, but time will always tell. I'm bearish, but I don't see the beginning of the move yet. The market keeps making new highs. I keep seeing periodically overbought conditions that produce maybe a little bit of a dip, but nothing important. Now, what's important? Getting below approximately 66.12, the low that was made, in fact, on September 17th. That is a low that's very close to another low that bounced off of the previous, and we end up at higher highs. But again, we're overbought at today's high again, and this is going to be, I'm going to skip the 1 minute and pass by the 5 minute, that is, and go to SPY, basically the same chart, of course. This is like the grandfather and the father and the child, meaning SPY, ES, and MES. So, overbought, not the greatest close, not worried about, expecting some sort of a big break. Pass on the 1 minute or a minute chart, any time frame, any number of minutes. QQQ, bearish engulfing ER sell signal today. First time since July 31st, which produced a very big break on the next day, but only lasted 1 day, which is highly unusual. Usually they last, if they're a good signal in the first place, substantially more than 1 day. Now, this was a big break on August 1st. Let's see what happens on Monday. I'm bearish because of the ER sell signal. It's red. And we've got another red on the MNQ, the baby, or, third down the line, grandfather, father, son symbol. Next, We have overbought conditions, not a reversal, on the YM. Next, we have the Russell, overbought conditions again. Watch out when these things happen. You will be very surprised, and if you're not prepared for it in some way or shape or form, disappointed and hurting. Bonds, a little higher high, lower close. Almost reversal, but not overbought. So let's see what happens. I got to pass on a comment, except I'm looking for bearish things to hang on to. Notes, outside down day, great, but not overbought, so therefore it didn't turn red. Like the top of the market did. Two of them real close to the highest high, not quite the high day, but in the process of topping out. I keep saying that now and then. I've been doing these YouTubes about 2.5 plus 2 3/4 years now, something like that. Every day that I'm not on vacation or sick or something. Next, we've got a crude doji, not oversold, close, in a support area. When we're in support and oversold, I like to talk about a turning point up, expected or happened or likely, for a variety of reasons, mostly because it's support and an oversold condition, which we don't quite have. It's close. We're not quite oversold. So I've got to be neutral and maybe expect lower lows because we're not oversold. Next, we were overbought. It did get into resistance above the market, and it is turning down today. Good. I think we're going to slip a bit lower. Remember, this is a complex head and shoulder top, double, triple shoulders, very rare. Head and shoulder top is part of the head. Not that uncommon, but people don't notice it more often than not. But it worked great. And unfortunately, no bearish engulfing at the very top of the market. I mean, that one that was a rally high, and we've never been higher since, and that was June 20th. So I'm looking for a minimum downside objective because of the top formation of 1.5, a little under 1.6. And this could be the start of the next wave down that makes new lows. Next, heating oil, dropping off below the lows of the last month plus and approaching the bottom of this pennant formation. We'll see what happens at support, which is now two lines, price support as well as trend line support. Next, bearish engulfing on the gold market yesterday. Now, today we came back up a chunk, but we didn't make it higher than yesterday's high, not canceling out the bearish engulfing. Closing or even getting one tick above yesterday's high would cancel out the signal. So far, it's good. And therefore, you have an opportunity, if you wish, to go short with a very low risk because your stop should be slightly above the high of yesterday. If you're right, the risk is super small and the profit potential could be a lot better than yesterday's signal. We'll see what happens. Now, silver also had the same signal yesterday, but it did unfortunately get above yesterday's high. Therefore, the signal didn't work. Remember, these signals are not always the highest high. This buy signal down here on April 9th wasn't the lowest low, but it sure as hell worked. This sell signal did work great, and it was the highest high for the rally. That was the lowest low. Don't take these things lightly. Include them in your analysis process in general. Now, no new high in platinum, but a new high close. Now, that does not necessarily mean that we're going to go shooting straight up. It's possible, but because of the bearish engulfing 3 days ago, I'm still bearish, and it's the same comment I've got for gold. Low risk, maybe, depending on your stop, and if it turns down, you're doing better than the actual entry because of the signal on September 30th, which was Tuesday of this week. Next chart is, hey, copper rallied pretty good above the resistance level that I had marked for a long time for good reasons, frequently topping out in that zone. Didn't do it this time. Yesterday's high was right smack at the bottom of resistance, but it blew through it today, closing even above it. So now I can justify talking about, oh, I don't know, 5.70, 5.28, and maybe even more than that. But we're overbought. When you're overbought, it's dangerous to start to go long. When you're overbought, you should be looking for and expecting some sort of sell signal, some technique to go short, whatever you like to use. And there's a mess of them, that's for sure. Next, we have a bullish, engulfing on soybeans at the bottom of the market still. It's been a couple of days and they've been higher highs since, which is nice, but today's close is a little lower. So I'm looking for still higher levels. There may be a little bit of a dip here, but I am looking for a test of at least 1054, 1052, I meant, and then up to the resistance area, which is defined by this yellow zone. Next, a little lower close also for soybean oil, but it did bounce off of twice, at least, the support area and start to make minor new highs. I'm friendly, looking for longer term bull move. Next, a new high, a relatively steady close on soybean meal. Oversold conditions has turned it up. No reversal, just simply a little divergence, and it turned up. Next, we've got corn, then wheat. And it turned up a little bit. Remember, I've been saying for a long time, a very long time, months and months, that the grain markets seem to be producing the kind of activity which would produce a very long-term bull market, but it doesn't happen. It hasn't happened yet. So I'm waiting, but I'm looking for those signals, those rallies that are going to be very convincingly long-term bullish. Wheat, the worst of the group, just made the new lows ever since the war began. The war began. It's been 3.5 years or something. By the way, I haven't mentioned it for quite a while, but okay, I'm going to do formatting. Okay, and then go back. The war basically began on or around March 9th, 8th of 2022. That's when we had a blow off top of renowned, famous amounts. In only approximately a week, it went from 1152 up to a high, give or take a tick, of 1639, and had a bearish engulfing at the very top of the market. The high day. This is one of the best signals I've seen for, gosh, many years, maybe decades. Now, Apple. Outside trading range day, but a higher close and a new historic high. Most people would look at this and say, well, it's a new high for the trend, a new high close for the trend, bull market, looks great. All of that is very true. And I totally agree, except we have an engulfing day in overbought condition that was not a bearish, but a bullish engulfing. I've seen this happen too many times to ignore. This sometimes is what I have nicknamed a bass-backwards reversal. It looks bullish, but sometimes it ends up being a high day. That's about the best I can say for this kind of activity. Now, I have to be friendly to bullish, except for that comment. If we start closing below today's lows, watch out. Bear move. Next, Bearish engulfing on Tesla did drop quite a substantial amount today. The low is a new low for well over about 2 weeks or so. All the next day after my bullish and bearish engulfing ER sell signal, which is red. This high in Tesla could be it for quite a while. I wouldn't be surprised. This is exactly the price action I would expect after my bearish engulfings. We're going to close the gap, in my opinion, at 396 and a half real soon next week, and maybe as low as 368 to close another gap, which is the first area of significant support. Next, overbought conditions on a little gap up. Maybe I have to check this real quick. The high that day was 88.14, and that's 188.14. I dropped the handle, and the low the next day was 06. So 06 is below 14, no gap. Double checking high. Yep, no gap. So overbought, turned it down a little, still overbought at the high, and slipping a little. It might have topped out, can't be very sure yet. And we're back. Ladies and gentlemen, you have a great weekend and profitable trading to you.